Hey there, everybody. Thomas with Basecamp Trading. It is Tuesday, February 6th, the day after that big crash we had yesterday. And we're going to talk a little bit about the S&P and one of the trades from the futures trading room today that worked out fairly well. And that was a short setup in the S&P. Now, I will go ahead and say this right off the bat. I did not take this short because it was picking a top and a move. And I personally do not go counter trend, try picking tops and bottoms. We had the longs initially on the breakout to the upside. However, we did walk you through it. If you're in the trading room, I walked you through how this was setting up, what it looked like on the right-hand side of the chart so everybody could understand. And we went basically bar by bar from this point right here, talking about when it was time to sell, how the market should behave, and it played out perfectly. And there's nothing wrong with trading counter trend if you want to trade counter trend. I personally do not. But if you're going to do it, you should do it the correct way. And one of the best ways to trade counter trend is by trading off of divergences. Okay, now what we had here in the S&P was just a beautiful 2-minute bearish divergence. So you can see we had pivot high number 1 where we rallied up here and then pulled back down, and then we had a second pivot high. This was right after the market opened at about 10:15 or 10:10. The second pivot high went up and we actually broke to a new high. We went 1 or 2 ticks above the previous pivot high. But if you look down here at the momentum, on the MQ momentum indicator, we had significantly weaker momentum. And if you look at the VSI, we had significantly weaker VSI. And if you look right there, you see that blue dot on the VSI. That's telling us that this bar, even though we broke to a new high, had lower than average volume. So the volume on that bar was lower than the average volume on this rally, which tells us when a market runs out of volume, and a lot of times that precedes it running out of steam and starting to roll over. So a divergence paired with weakening volume in an extended market with the VSI sets you up for a very good short. We ended up turning around and we pulled right back down. Now the first test on a divergence is, can you break through the previous pivot low, the middle of that divergence? And in this case, that was at 26.50.5. Now that doesn't look like much. It doesn't look like too much movement, but with the volatility we've been having, this swing from the high here down to there, this is 30 points in and of itself. Okay, that's from 80 to 50, 2680 to 2650. And then you broke, and we continued to sell off all the way down until we broke and started picking up a little bit more momentum right over here. Okay, when we broke this little bounces high. And that was all the way down. It bottomed out at about 26.16.5. So really the move from the top to the bottom was nearly 60 points. Okay, so a lot of money to be made. Now, one thing to keep in mind, when you're in more volatile market environments like we have right now, like we're seeing at the moment, your stops are wider, but your targets are also further away. So you're not going to be getting out with just a couple $100 profit. You're looking for several $100s to a couple $1,000 profit per trade, even if you're just day trading. So volatility makes for really good opportunities to make money, but it can also cost you some money if you're not careful. All right, but either way, great job to everybody in the trading room. I know there's a lot of people that took the shorts here because we had divergences in the S&P on the 2-minute price chart. We had divergence in the Russell on 2-minute price chart and in the Dow on 2-minute price chart. And on the NASDAQ, and they all turned and pulled it right back down, just like we wanted to see. So great job, everybody there. And again, this is just, if you're going to be trading counter trend, one of the best ways to do it is using momentum and looking for divergences where you have weakening momentum, even though market pushes to a new high. Alrighty, that's all I have for you for today. I will see you in the trading room bright and early tomorrow morning. And until next time, happy trading, everybody.